In this presentation, we're going to continue on with part 2 of entering the payroll information into our system within QuickBooks Online. Here we are in our Get Great Guitar system. Last time we entered our information, we're imagining we have payroll or paychecks basically giving us this register information. And that register information we're going to enter into the system. So we're going to imagine that we have a third party that's helping us to process the payroll. They process the payroll. We're going to say it basically came out of our account, our checking account. And now we have to mirror that. We're going to process this information into our system. We can imagine then seeing the checks that are coming out of our bank account on our online bank system or in our bank statement. And now we got to enter that information into QuickBooks. Now, it's a little bit more complicated, of course, to do so because of the payroll liability information we have to do. We're going to then be taking the register, in essence. We'll take this register information, enter it into the system. We thought about it in terms of journal entries, and typically, if we're trying to tie out to each specific check, we would have to enter the journal entry basically by employee. So we're going to take our two employees, Adam and Erica. We break it down to basically this journal entry, which will result in this net check for Adam, this net check for Erica, and we'll enter that information into our system as basically an expense. So let's go then into our QuickBooks. So we're going to go back into QuickBooks Online, and we're going to be taking a look at a expense. So I'm going to use the expense form. I'm going to select the drop down. We're going to be going down to add expense. So it's going to be like a check form, but an expense as if we're imagining here this came directly out of our checking account. So then we have the business operations, other, or inventory. Note we can't use the first one here because it won't let us hit any balance sheet accounts. So we're going to need to use then the other reasons. So we're going to go to the other reasons down below. And then we're going to be picking up the person we are paying. That's going to be Adam Hamilton. So let's copy Adam Hamilton, go back to the QuickBooks Online, and that's going to be our employee and tab. Now note, I'm setting up Adam Hamilton as a vendor. So I set up Adam Hamilton as a vendor, even though they're an employee. I would do that for a couple different reasons unless you're processing payroll within QuickBooks, because I don't really want to set up Adam as an employee in QuickBooks if I'm not using the QuickBooks system, because I don't want it to mess up anything if I later decide to use QuickBooks, the QuickBooks system for payroll. So I don't want to have any preset employees that are kind of partially in the system. And two, I don't want to show you how to set up an employee in the system if I can't set up the most important part, which is going to be the information related to the payroll taxes and whatnot. Everything else is going to be very similar to what it would be for a customer or a vendor, basically the information, contact information, that kind of stuff. The payroll tax information, of course, is the thing that would differ if you were to be processing payroll. We'll do that in a separate section below the main course project. We're going to say the date then is going to be 01/31/20, the end of the month. It's going to be coming out of our checking account. Note that you may want to take it out of, in practice, another payroll account. You might set up a payroll account simply to put money into it for payroll and then to take it out. Why? Because if you have a lot of paychecks into that payroll account, it'll be easier to track those specific payroll paychecks. If you have like 20 people, then you may want another account just to say, hey, that's my payroll account. Everything in here is payroll. If you have a question about it, I don't need to mix it up with anything else. It's all in payroll. We're just going to be using the checking account here. We have our two employees, so we should be okay. We're going to go down and add our expenses. Now, I'm going to add an expense, or I'm going to choose payroll expense. Payroll expense. Now, I've already set it up as an expense type of account, so you may need to set it up in your system. If you do, simply just type in payroll expense, hit tab, and then you want to set it up as the account type of an expense. So it should be an account type of an expense and the name payroll expense. Now, the big thing, the amount going into payroll will not be the amount of the net check. It's going to be the amount of the gross pay. So we're going to take the gross pay of the 4583.33. So I'm going to put the gross pay of the 4583.33 there. And then the next account that we're going to have is going to be the payroll liability. That's going to be what was taken out of the paycheck, including Social Security, Medicare, and income tax, or federal income tax for the employee, not ours. And so we're going to say this is going to be payroll liability. and tab. We're going to set that one up. It's going to be a liability account. So if I choose here, it's going to be accounts payable, credit card, no other current liability. That's the one. That's the one. And let's see if we have a payroll. We have payroll tax payable. That looks good. And then I'm going to call it payroll liability. That's fine. All right, that looks good. So then we're going to say save and close. And there we have it. Now the amount is going to be the combined amount of these three items, which is 1044. I'm going to put it in here as a negative 1044, which is kind of the confusing thing to enter these items. And the difference between those two, the expense and the liability, comes up with 3539.33. Does that get to our net check? 3539.33. Yes, that's going to be the net check. So what's going to be the effect of this? It's going to be decrease in the checking account for the net check, or the net amount that came out of the checking account, electronic transfer of the 3539.33. It's going to be increasing the expense account of the 4583.33 gross pay, not the net pay, the gross pay. And it's going to be increasing the liability. It's going to be increasing the liability. I know it has a negative here. It's going to be increasing the liability with the 1044. And that's the amount that we have to pay to the government in the future. All right, let's do this again. Let's do it again. We're going to say, that was good times. So let's say save and new and do it all over with the second employee, where we will take Erica's information and enter that into the system. So now we have Erica. For some reason, we don't have a last name for Erica. Erica has a last name, I think, but we're going to say Erica. I'll give her Smith. All right. Smith's always a good last name. And then we're going to set it up as a vendor, not an employee, for the practice problem. And again, you may want to just simply do that in the system if you're not running payroll within the QuickBooks system. And then, and you might, if you do that in the notes down below or something like that, you might want to, reference that this is an employee that's being processed through some other system, Paychecks or EDP. It's going to be coming out of the paycheck, as with the last one. We're going to be debiting payroll expense. So we'll debit the payroll expense, and that's going to be for the amount of the gross pay, which is $800. So we'll pick up the $800. And then we'll have the payroll liability right underneath it. So I'm going to say payroll liability. See how it populates for us now? Isn't that nice? And that's going to be for the sum of these amounts, or the 170. So I'm going to say that's going to be a negative 170. All right, that leaves us with a gross check, or a net check, or a net amount that comes out of our checking account, electronic transfer of the 630. There's the 630. So that looks correct. What's this going to do? Increase the pay. Well, it's going to decrease the checking account by 630, increase the payroll expense by the gross pay, 800, increase the liability that we owe for payroll taxes of the 170. Let's go ahead and save and close this now. And then let's see if we can run some reports. So we're going to then go to our reports, and let's open up our three trusty reports here, since this is a new thing. We'll open up the balance sheet. We're going to scroll back up top and change the dates up there from 01/01/20 to 12/31/20. We'll go ahead and run that report. Then we'll duplicate the tab up top by right-clicking on it and duplicating it. We'll go back to the tab to the left. We're going to do the same thing for the P&L, the profit and loss, the income statement. So there's the P&L, profit and loss, income statement. Let's change the dates up top to the same range. Once again, that being 01/01/20 to 12/31/20. We'll go ahead and run that report. Then I'm going to duplicate the tab up top, right-clicking on it and duplicating it. And then we'll open up the trusty trial balance, just for because that might be a good thing to have open too, because we have multiple accounts affected here on both the balance sheet and the income statement, and that's when the trial balance is trusty. So we'll open up the trusty trial balance, and I'm going to change the dates up top there as well from 01/01/20 to 12/31/20. We'll go ahead and run that report, duplicate it, go into the tab up top, right-clicking on it and duplicating it. Now let's take a look at what we got. If we go to the balance sheet first, I'm going to go to the balance sheet. I'm going to close the hamburger in the balance sheet. There we go. And I'm gonna hold down Control and go up a little bit. So we're at the 125. So I'm currently at the 125. Now, obviously, the checking account should be going down by those two amounts. So I'm going to go into the checking account. We're going to open that up. Scroll back down. There they are. There's Erica and there is Adam. And it's a split between the two other accounts because there's more than one account that is going to be affected. And we've got these two amounts in there. They're not checks, but they're two, we're going to call them electronic transfers that came out of our checking account. That then should tie out to the actual amounts that came out on the bank statement so that we can then do our bank reconciliation. That's why it's better, or it might be better, or you have to think about whether you want to enter them one at a time, or you can enter them as a total, which would be easier to do, make your financial statements correct, but might be a little bit more difficult to reconcile on the bank statement to your books. If we open any of those or one of those, let's open one of those. Then we're going to get to our form, the expense form. So there is our expense form and there is our calculation. There's the 630. So let's close this back out. Now and let's go back up. Let's go back to our balance sheet. Then the other side you would typically think would be on the profit and loss. So then if we go to the profit and loss, close the old hamburger, scroll on down, we see that we have the payroll expense at the 5383.33. That should tie out to our total here, right? Total expense for gross pay, 5383.33, 5383.33 in the total on journal entry format. I twisted my tongue there, sorry. So then we're going to be down here in the payroll expense. And same thing, if we opened up one of those, obviously we would go back to our expense report. Closing that back out and scrolling back up top. And if we go back to our profit and loss, the other side of it, of course, is the liability side. Back to the balance sheet for the liability side, that's going to be in the current liabilities. We have this item, that's what we owe to the government. That's what we took from the employees, and that's what we have to pay on our own for payroll taxes that we need to pay to the Fed for Social Security, Medicare, and the federal income tax. Once again, we see the three amounts there. They add up to the 1,214 total, which if we looked at our trial balance in total, that would be these three, right? That would be the 1,214, which would be the 1,214 here. So there we have that. What we don't have yet is the employer side of things now. So now we're going to enter the employer side of things, and there's no check that's going on here. Therefore, we might just want to enter this as one journal entry, basically one transaction instead of having two separate transactions. Now, note here, we don't have cash affected, so I'm not going to go into an expense account. Typically, you would be using some type of journal entry here when there's no checking account affected, but we could use the registers, and that's what we'll practice doing. So this second register down below is a liability register. That's the one we're going to have to use. So now I'm going to go back to our QuickBooks. I'm on the online QuickBooks, not the desktop. Let's go back to the first tab, and I'm going to scroll back down to get back down to 100, so QuickBooks doesn't do anything funny to the forms, doesn't squinch them up or anything. So then I'm going to go down to the accounting down below. We're in our chart of accounts. And you'll see we have a register, you'll recall, for all of the balance sheet accounts for the most part, not for the income statement accounts. Therefore, I can't go into the expense account, but can go into, hopefully, this liability account. For the payroll liability, let's use that register to see if we can enter our transaction into it. If I see the drop down, remember all the options we had for the checking account register. Here we only have two. We've got a transfer or a journal entry. So it's actually a journal entry. That's what QuickBooks thinks of it. That's the form that's going to be there. There is no form. Therefore, you have to use a journal entry, even though we're going to enter this into the register. Okay, I'm going to enter this in as of 01/01. I'm sorry, not 01. 01/31/20, the end of the month. And it's going to give us a reference number. That's fine. I'm not going to put a payee, because I'm going to put both employees in there. In the memo, I'm going to say payroll tax. Let's keep it at that. And then we're in the liability. The liability is going to increase. So the liability is going to increase. We're not in the checking account register. We're in the payroll liability register. It's going to be increasing by the total of these two, which is going to be the 384. So it's going to increase by the 384. Let's do that. It's going to increase by, am I an increase? Yeah. 384. And then we're going to say the other side of it then is going to be going to, this is to the payroll expense. Payroll expense. Now note, this is when you might want to break out payroll expense, which is the gross pay of the employees, and payroll taxes. In other words, you could make this account a new account called payroll taxes. And let's actually do that. Sometimes QuickBooks combines these, but it's useful actually to break these two out, and most people don't understand why they're broken out. So let's go ahead and break them out, and we'll say tab. I'm going to say that this is going to be an expense type of account. So I'm going to say this is going to be an expense, and I'm just going to call it a payroll type of expense, and we're going to put it into payroll taxes. So then I'm going to say save and close, and then we'll go ahead and save that and see what that does. So then we're going to go back to our reports. Let's go to the balance sheet report and scroll back up top. Going to go back. Now within the payroll liabilities, if I open up the payroll liabilities now, I'm going to have a couple sets of transactions. I got the two expense forms for the two employees. This is what was taken out of their paychecks. And then I have the journal entry. The journal entry form is what we had to put in and pay over and above. If I go into the journal entry form now, you'll recall we put this into the register, but QuickBooks will see it as a journal entry. It doesn't go to any form. In other words, QuickBooks said, I don't know where to put this. I don't have any form to put this on. Therefore, I'm going to a journal entry. We're going to the debits and credits themselves rather than a data input form. Closing this back out and scrolling back up and going to the profit and loss report, we can see here that now we have the, let's go ahead and refresh this. I'm not sure it's refreshed. Then I'll close the hamburger. I'm going to make it a little bit larger, 125. Okay, so now we have the payroll expense. That's where the gross pay went that we saw last time. And then the payroll liability. Remember, the payroll taxes. Remember that the payroll taxes is going to be, if they're broken out, and oftentimes they are, only going to include the employer payroll taxes. Doesn't include the employee payroll taxes. And if you go into that item, then of course we have our journal entry there, which has the form of a journal entry because there was no other form. Therefore, it's going to default to the journal entry. Let's go back to the profit and loss. Let's just review it one more time on the trial balance. This is where you can see everything at one spot. And given there's multiple accounts affected, it's nice to see the trial balance. So what happens if you just look at the trial balance? The checking account is going to go down. The checking account went down by the check to Erica and the check to Adam. So the two checks are there. It's going down by the net pay, not the gross pay. Going back to the report, the other side of that you would typically think of as payroll expenses, which you see down here in the income statement section of the trial balance. Going into the payroll expenses section, you see the gross pay and the payroll expenses for our two employees. Going back up top, back to our report, the difference between the gross and net would be in the payroll liabilities. So in the payroll liabilities section, you see payroll liabilities. Then we go into that item. We see those two expense forms for the payroll liability, but also that journal entry. And there they are. That's how much was taken out. That's the difference between the gross and net pay. Back to our forms. We also have the payroll taxes for the employer portion down here. We put it into its own expense account. There it is. So this is what we had to pay over and above with like a separate transaction, another journal entry other than the checks we paid to the employees or the amounts we paid to them, the electronic transfer. And then the other side of that is also in the payroll liability account up top. So if we go into the payroll liability account again, once again, we'll see that journal entry for the employer portion. So I'll scroll back up top. This is what we have right now in the trial balance. We'll try to break these out and give you a copy of the trial balance so you can kind of compare them after each section.